The Fed Chair Janet Yellen's four-year term ends in January 2018, and this early we're hearing from three of her potential replacements: Stanford's John Taylor, Columbia Business School's Glenn Hubbard, and former Fed Governor Kevin Warsh, saying they would pursue tighter monetary policy if they were in charge. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now for more. The basis for this conversation, Michael, is the assumption she doesn't get a second term. That's the assumption.
A reasonable one, given
assumption.
what Donald Trump has said.
The three names in line, hawkish but not outright there saying we need 200 basis points from here. It seems to be quite hawkish on the margin, so to speak. Yeah,
they all spoke at the American Economic Association conference in Chicago this weekend, and none of them put a particular number on where the fund rate should be right now. They all just said basically they think the Fed is a little bit behind the curve. You look at the Taylor rule, named after one of those candidates, and it would put the Fed funds rate at about 2.1% or something like that. The Fed's at 66 basis points. So on that basis, they are a little bit behind. Hubbard said the Fed's overstated shelf life. Warsh saying the Fed was pursuing a will-o'-the-wisp policy that was aimed at very short-termism, and they should be longer-termism. So a lot of criticism of the Fed for not having the funds rate higher, but no suggestion of exactly how high, how fast.
We had a conversation with Mohamed El-Erian on Friday, and we talked about the labour market report, and he said cyclically robust, structurally challenged. But if it's structurally challenged, that's a job for the government and not for the Fed. So if these guys got a point, and the committee at the Federal Reserve, the centre of the committee, are they drifting towards the Kevin Warshes of this world?
Well, they're moving in that direction. They all believe the Fed funds rate should be higher, and they all agree at this point that it is too low. The problem is, how fast do you get there? What do you do to the markets when you raise rates? And that's a point Warsh makes, that the Fed does not take into account financial markets as well as it should. And other Fed officials say, yes, we have a problem with that. It's not good in our models. We're not exactly sure how to put the impact of market gyrations into there. So it's something they do have to work on.
Any idea if John Taylor would want his own rule if he headed the Fed?
He does want a rule. One would assume it would be his rule. The problem with the Taylor rule is you need to specify the parameters.
Yeah.
The neutral rate is lower than the Taylor rule anticipates. The potential growth rate is lower than in the Taylor rule. So there would have to be some tweaks to it, so it isn't clear whether that's the best idea. You might want to watch Warsh, though. This is a guy who is not only a former Fed official, so he has experience, but he is independently wealthy, which Trump seems to like. So there may be something to a Warsh candidacy. The other thing is, does Trump really want higher rates? Does he want the Fed leaning hard against his stimulus?
Kevin Warsh, also a guest of this programme, so we've heard a lot from Kevin Warsh in the past. But to your point about the higher rate story, the basis of this conversation was the assumption that Fed Chair Janet Yellen wouldn't get another term. But if he's a low-rate guy, which is what he's told us in the past, why wouldn't the President-elect want a low-rate Fed chair?
Well, he has been on both sides of the issue. He was very critical of her during the campaign. Some of his appointees are now saying nice things about her. It all depends, perhaps, on how they get along once they finally meet, and what the president really wants by the time he gets to the fall, when he needs to make a decision about who the next Fed chair is.
She's got a great stamp collection. Maybe they can talk about